Okay, guys, hold your horses. The bull market might not be here to stay. Yes, we are going to talk about Apple in this video, the threat that Apple is to the stock market. We're going to talk about, quote unquote, meme stocks and how they play into this whole equation, what could happen with AMC, BBBY, GameStop, all these other runners that we have seen over the past couple of weeks. But I think most importantly, and this is not a recommendation, do not buy, sell, or trade anything that you see on a YouTube video. You will lose money with almost a 100% certainty. So there's your warning. Do not trade anything that you see. But I want to go over for really my own documentation because I am putting so much money on the line for relatively shorter term trades that I want to hold myself accountable and document this journey with you guys. Yes, I will be going over all of my positioning that I currently have for the downside. And if you guys haven't picked it up yet, I think Apple is a threat to the market. I think the markets itself is presenting a very big opportunity. And the last thing that I want for you guys is to be unaware of what is going on. To just think it's peaches and roses from here on out. Maybe it is, maybe it's not, but we have a lot of things on the near-term horizon, especially the Jackson Hole Economic Symposium, that could present a lot of issues for the stock market and potentially make a lot of money in the process with some of these hedges. So we're going to get into this whole situation. Hit that like button and subscribe to the channel if you guys have not already. This is probably one of the more important videos that I have ever put out, just considering the velocity of what we have seen in the stock market and how much money could be there to make. Now, we're in a lot better spot than we were a couple of weeks ago, couple of months ago. That's mainly due to a lot of conflicting data that we were getting. At one point, it looked like we were going into an 08 style recession that was going to be very hard, very long, and there was no end in sight, right? The Fed's not going to be able to bail out the markets. That's what it looked like a couple of months ago. Since then, like I said, we've had a lot of conflicting data. The consumer looks to be in better shape than what the markets had expected. So I don't think it's as bad as what we've seen before in that sense. But I do think the markets are not using their common senses and they will be forced to come to common sense, right? So let's talk about exactly what's going on, especially with Apple. We have a video to go over from the Chartmaster that I will play later on in this video. But if you simply look at Apple, this rally to where we are currently, up 34% from the bottom, is over twice as aggressive as a rally that we've seen off of the COVID lows. Look at the trajectory here. You're almost vertically straight up. You're at like a 70-degree angle there, right? You're at a much lower angle right here. It was a very different kind of recovery. It was more of a slow and steady rally until we got to about August of 2020. That's where things did start to pick up a little bit more. And given the state of the economy, given just Apple as a business, I've been very vocal in it. I'm not bullish on Apple at all. I think they had a lot of their demand pulled up years, meaning people were just staying at home buying Apple products, in which they're probably not going to buy more products in that same way for years because of all the funny money that was pumped out there. I think Apple was a big winner to all of that, and that's why Apple has really come so far, to 3x, or I mean the low in 2019 of Apple was $34. It sits at $174. The COVID low was $50. It sits at $174 right now. That is still a 3x from the COVID low. Name me any other stock that is over three times higher from the COVID low bottom as where it is right now. Very few and far between. And this aggressive rally that we have seen in Apple is really in proportions to some of the greatest meme stocks of all time relative to the dollar amount that has been gained in Apple market cap. It's unlike anything the markets have ever seen. So to say the situation is better than what it was a couple of months ago, sure, I think we can all agree with that. Market sentiment is just a lot better. But this much better, I'm not buying that, okay? So if you even look at the RSI, we are now in overbought territory. We have not been in overbought territory since December 9th of 2021. So we are strongly overbought right now. The MACD suggesting the same exact thing. Now, what do we have as far as economic data for next week? Well, we have really Jackson Hole Symposium. This is really where all the the important feds of the world, the Federal Reserve banks of different countries, come together and they discuss economic policy, and they kind of try to give their guidelines on what they want to do, where they want to see the economy and the federal funds rate by the end of the year. Not just, you know, Fed Jerome Powell is going to be speaking, but Europe, India, you know, China. I'm pretty sure China's central bankers go there too. All of these major players on the global stage go there, discuss what they want to see, right? So if you consider how this rally actually happened, with an off-script comment from Jerome Powell saying that he thinks the Fed's going to slow down at some point in the future. I mean, isn't that common sense? Isn't it common sense that the Fed can't raise rates like 75 basis points or 50 basis points forever? I tend to think so, right? So the markets took that comment and ran with it as if the Fed's going to slow down raising rates at the next Fed meeting, which is possible, but I think it's probably very improbable. So we have that. We have the Jackson Hole Economic Symposium that starts Wednesday, that ends on Friday. On top of that, you do have the estimates for the Q2 GDP coming in revised yet again on Thursday. That comes in at about 8:30 in the morning. Durable goods orders month over month for July on Wednesday coming in at 8:30 as well. New home sales on Tuesday. I don't think that will be very important. That's at 10 o'clock in the morning. And then on Friday, you do have the personal income month over month for July and personal spending month over month for July coming in at 8:30 in the morning as well. So you have a lot of data in this upcoming week, and we have not heard from the Fed since the Fed caused this major rally. And that's the last thing the Fed wants, is the stock market going up, because historically, if the stock market is going up, you tend to see more inflation. The Fed is usually the killer of inflation and the killer of the stock market. That's why the two tend to correlate so strongly. Now, if you do look at the option activity for Apple stock here today, 367 orders totaling $66 million, positive order value of 55%, a much lower positive order value than we are used to seeing with Apple stock. Usually we see a lot more calls coming through on Apple than you see puts. And if you really look at all of the activity today and just look right here where it says P or C, puts obviously meaning puts, calls obviously being the C, you see a lot more puts coming through on the option chain. That's very clear to see, right? So you're seeing a lot of hedge funds that are starting to get a little bit jumpy, starting to put a little bit of put action to work, right? And I don't think it's a bad time for individual investors at least to have this knowledge of what is going on and what the hedge funds are doing. Now, we are going to go ahead and take a look at some of my positions on specifically Apple stock, and we're going to take a look at the UVXY as well and why I like these trades. So if you guys look at Apple, I do have some positioning on Webull as well, but this is going to be a bigger position. I do have Apple 170 puts for September 16th, two of them for $313 a piece. That, you know, being about $640 roughly in that one trade. And I think this one's just good because it's closer to the money, right? Apple to fall $4, these puts would be in the money, and you can get a pretty good risk to reward on these options. I really like this though, because if Apple fell 13.5% with this other trade, you would make $18,000. Instead of the 170 puts, you would only make about $4,000. So why are these debit spreads so attractive right now, and how do they work? Well, you can get until September 16th a really good risk to reward ratio or potential out of these Apple debit spreads. Now, how you do a debit spread, very simple. If you're on Robinhood, it'll be very simple to do, but you'd buy, let's say, a 155 and you'd sell a 150 like I did. Now, click buy, click on this other tab, hit sell that one. It says total cost. That's for one. Your profit would be about $500. Max profit if you only bought one for $27. Now you type in 40 in here. Max cost $1,080. Well, if Apple falls 13.84%, you would make almost $19,000. You'd make $18,920. Basically, because you profit as long as Apple drops under 155, you start to make a lot of money. So even if Apple dropped 12% to 153.16 by September 16th, you would still make over $6,000. That's still better than the options, in which you would only make $1,700 a piece. I have two of them. You'd make over $3,000. So it's a really, really good risk to reward ratio right now on Apple stock, and I think Apple should be trading around 150, if not in the 130 range, if we're talking an actual fair valuation. Now, the other trade that I have right now, I really like this one. It's the UVXY. It's the VIX short-term futures ETF. So when people are fearful, this goes up just like the VIX. Now, we had a lot of support around $11 on the VIX, on the UVXY, right? And the markets have been basically just going up, so the VIX has basically just been falling. The UVXY has plummeted into the ground, and it's the same concept. You get a very good risk to reward ratio on the UVXY. So I did go out and I bought 10 UVXY September 16th $10 calls for $78 a piece. They're currently trading at 70, so you can even get a better deal on these than I did. Obviously, options probably going to expire worthless. Don't do it unless you are fully prepared to lose all of your investment or your money that you put into those options. Say the UVXY goes to 15, well, you would make 500 times 10, you'd make $5,000 on that trade. Pretty good risk to reward ratio, right? But if you look at the actual debit spreads here, that's where I think the money is with the UVXY as well. If the UVXY also went to 15, you would make, on this trade, these 30 debit spreads, you would make $3,000. So how you do that? Same way as you did on the put side of things. You would buy a more expensive option, sell a cheaper option, so it does cost you money up front, in this case $6, and I went in and typed in 30, it costs you $150. If the UVXY rallies 70.26%, it sounds like a crazy number, but the UVXY could easily do that, then you would make almost $3,000 profit. And I think these are really good risk to reward ratios as of right now, because what's your max loss in this? 150. Your max gain 3,000. That's 2,000%. That's not terrible, relatively speaking. The UVXY was just in that range back in June of 2022. Especially if the markets get upset right now, you might start to see a lot of people flood into protection like the UVXY. So that is going to be all for this video. Thank you guys for tuning in. As far as how meme stocks, quote unquote, fit into this whole equation, I think it could go one of two ways. The hedge funds might short these stocks into oblivion, or we may have seen some of that shorting action already, and then they might serve as somewhat of a safe haven because they don't trade off of really fundamentals. They trade off of momentum. So if that can get started, I think it could create another round of some of that meme stock momentum that we have seen over the past almost 2 years now. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public down below in the comment section as well. If you guys want to come trade with me live in real time, link down below in the description. That is it. You guys enjoy the rest of your day. I will see you in the next one.